Hey, good evening, fam. Good evening. Happy Sunday to everybody. Happy Sunday and happy Father's Day to all the wonderful fathers out there. Happy Father's Day. Listen, so I wanted to have a conversation with you guys today, right? Because I was watching a gentleman today who I follow, right? And he had an awesome topic today, right? And he was talking about, I guess it was a article that he was reading off of, right, where a young man they left him an inheritance of, I believe the property was worth about, let's say 800,000, somewhere around there, right? Is how much the property was worth, right? But there was still a mortgage on the property, right? And the gentleman only makes about 30-something K a year, let's say a little bit under 40,000. So obviously, with that being said, with the balance that's left on the home, he can't afford that mortgage payment. So in my mind, I'm like, well, this is a wonderful topic to talk about, because for some reason, and I'm sure this is coming from the school of the Dave Ramsey. This is coming from the school of the Dave Ramsey, which is you buy a term policy and hopefully and you invest the difference, right? So hopefully you have built some form of wealth and your mortgage has been paid off. Okay? When you pass away, you can leave your family a home free and clear, right? And that's supposed to help them sustain, right? And we know that rarely ever works out. It really, even think about it for a second. Even if you left them the property with no mortgage, you still got annual taxes due on that property. Some people may not be able to afford that. So to me, I'm like, well, why would you get rid of your life insurance policy? This is why I'm not a huge fan of term. You understand? Because if you follow the Dave Ramsey rule in this scenario, let's say this is, I'm almost willing to bet this is what happened. The gentleman had a term policy. The kids are now grown. They believe they don't need insurance anymore, and they'll leave the children the property. Well, if you're leaving them a property that they can't afford to pay on, then that property will be gone in no time due to a tax lien or whatever, or even a foreclosure if there's still a mortgage balance left. But if you left them a significant amount of life insurance, not only can they pay off the property, they can also pay the taxes on an annual basis with the life insurance money, if they're smart with the life insurance proceeds. So for example, most people who have helped structure a death benefit has been, okay, cool, instead of you putting this money in your bank account, let's take a portion of it and open up an even bigger life insurance policy for yourself. So now you repeat the cycle for your children and put the rest into an annuity, right? And that annuity, you'll be pulling out interest every single year to pay taxes on the property. But you can't do that with a mortgage. You understand? It was a video I did the other day about a gentleman who actually wrote in an article that I found myself. And the gentleman in the article said, hey, my child will most likely need Medicaid or Medicare for the rest of their life. Should I invest in stocks? And to me, I'm like, this is crazy. If your child is going to need care for the rest of their life, why will stocks be the first thing on your mind? Why not, should I invest in a $5 to $10 million life insurance policy? Because that is a guarantee. So at least if I pass away, I know there's $10 million that's going to this child who's going to need care for the rest of their life. There's no such guarantee in stocks. So I don't understand why people dismiss life insurance and try to do other things when life insurance is probably the guarantee that you have out there. If you're watching this and you're going through the same scenario, or you know somebody who came across an inheritance, or you know somebody who has children that's probably going to need care for the rest of their life, I want you to share this with them. I want you to share this with them. Because if you want to guarantee the protection of your child who's going to need financing when you're no longer here, you want to guarantee it, it's probably going to be life insurance. Because you invest in stocks and that market goes down or some crazy thing happen, your money is done, it's gone, it's out of here. So back to the original topic that I was talking about, which is this gentleman who came across an inheritance by way of a home that was transferred to him that I believe still have a mortgage on it. I'm wondering in my mind, if you're gonna do that, I'm hoping you also attach life insurance, a significant amount, to that inheritance that you're giving that child. So that child don't have to worry about the headache of dealing with trying to figure out how to pay that mortgage. Okay? Trying to figure out how to pay the taxes. You understand? On that property every single year. Trying to figure out how to make, if he only make $37,000 a year, just maintenance alone is gonna crush him. And then we're talking about taxes also. So where is the life insurance in this play? A lot of people, when they're planning their financial portfolio, they forget the basis. And the base, your base foundation has to be life insurance. What is going to hold your portfolio up is life insurance. It's nothing else. That is the foundation. That has to be there first. And then you can start to build upon that. But a lot of people are listening to this Dave Ramsey craziness that tells you, oh, trash value life insurance. Right? Let me tell you something I know about Dave. Unless you are a wealthy individual, I wouldn't be taking Dave Ramsey's advice. Here's why I say that. If you're making $500,000 a year, let's say, okay, I'm going to assume it's probably easy for you to put away or invest $100K a year. That's 1/4 of your that's a little bit less than 1/4 of your earnings. Okay? 100K times 10 years is $1 million. Okay? The average person who makes 60-something K a year cannot nowadays afford to save anything. So if you can't afford to save anything, then wouldn't it make sense for you to say, hey, you know what? At least let me get a permanent life insurance that I know will transfer to my family when I pass away. At least I'm able to leave them something if I cannot leave them a significant amount of money. Because a person, again, who makes 500 grand a year and they make that for the next 30 years, okay, and they're only saving $100,000 a year, and this is without any interest earning, okay, can accumulate over $3 million in their 30-year period. Okay? And this is without interest. Throw some interest on that, they could probably end up accumulating $4 to $5 million. Okay? Now that person now can transfer that over to their children. So when he tells you that, oh, you should buy term and invest the difference and transfer your house to your children and blah, 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 things like that, if you're not a wealthy person, I don't know if that's a sound advice. Even if you are wealthy, a lot of wealthy people have permanent life insurance, because the permanent life insurance allow them to put money away, grow massive amount of interest return, safeguard their money from the stock market effect, and then later on pull the money out tax free. Why wouldn't you do that? That's intelligence to me. That's intelligence to me. And I believe Dave Ramsey is a smart guy. So for me, I don't understand why he would give that kind of advice out to people. It doesn't make logical sense to me. And I believe this is a smart person. I believe Dave is a smart human being. So to me, I do not know why he would give that kind of advice to people. But hey, to each his own. I'm here to tell you to use this thing up here and think about it for a second. The average person is going to die still owing a mortgage. If you follow Dave's advice and you got rid of your life insurance, now you're leaving your family with debt with no way to pay it off. Okay? Listen, I want to share that with you guys today, as this being Father's Day, right? And for all the fathers out there, if you're out here without any life insurance, listen, the Bible states that a good man should leave an inheritance for his children's children. That's what the Bible says. So today on Father's Day, if you're out here without any life insurance, please text me. Let's see how we can get together and get you covered. You can contact me at 443-208-5480. That's 443-208-5480. You can also go to my site, which is TitanEvolutionGroup.com. That's TitanEvolutionGroup.com. Okay? And if you're watching me for the first time and you like what you're hearing, or you can relate to what you're hearing, please subscribe to my channel. Please share this with somebody that you feel as though need to hear this. And also hit the like button. I bring over almost 2 decades of experience. I've been around now for 16 years, going on 17 years.